here's an interesting test for you to determine if it's better to hold positions overnight on the long side or hold them on the long side during the day. We have night trader strategies on the long side. And so this is a basic easy language file. They test two scenarios. One, you buy the day session open, and this data is at es.d, which is the day session only of the E-mini S&P. Now both of these are active right now, and so they cancel each other out, and the performance summary is 0 because both of these cancel each other out. So I'm going to look at each one separately, and we're going to comment one out. So we should buy the open and sell the close as in scenario A. And so this data goes back 10 years. So the last 10 years during the current bull market, if we buy the open and sell the close, how do we do? So let's take a look at that. This is without any transaction costs. This is just based on a principle of which one is better, which approach is better. Does the market go up more during the day, or does it go up more during the night? There is no stop loss. We're just buying the open, selling the close, and then next we're going to test buying the close and selling the open. And so, wow, if you take a look at this, the current bull market during the day ended in January 16th, 2018. This is very insightful. This is the type of strategy you could use to help determine the trend. And for example, in a money management algorithm situation, is the trend up during the day? Well, this strategy says it's not really up. You know, there's been some periods of time when it's gone back up there and there. But since January 2018, it has not made new equity peaks, buying the open and selling the close. And so what does that tell us? So let's take a look at the other scenario. The other scenario says, do we buy the close? We get in on the close, we go long at the close each day, and then we just exit at the open each day. Again, no transaction costs because we're simply looking at this from a principal point of view, which strategy, which setup goes up more. We're just looking at a market principle here. We're not trying to develop a trading system. We're looking at a market principle and what the characteristic of the market. So I'm going to verify this, and we're going to look at the results. And much better results. The average trade profit went from 17 to 24. So even if you take out slippage and commission, you're about break even. Much more total net profit overall in the last 10 years, much slower drawdown, and we're near equity peaks. And this equity peak was in May of 2019, and we're approaching this again. And so this is an interesting concept. Do you you'd think that during a bull market you'd make more money buying the day session open and selling the close than you would buying the close and selling the open, but that just isn't the case. You make more money buying the close and selling the open in this bull market. And so what does that tell you? There's a lot of market making going on during the day, and your best bet if you're going to short-term trade is to find a way to get in at the close and then sell at the open in this type of bull market. Because of all the market making, because of all the machine trading, tends to be probably a negative proposition just to strictly buy the open and sell the close. You might do better selling the open, buying the close of the day, selling the open, and then working on the short side during the day if the market was up. So that is that's what I wanted to look at. That's what I want to emphasize in relation to some of our night trader strategies. Why does this go up so much at night? And the proof is in the data. 10 years of data. This is not a trading system that we're trading, but we are more selective in this approach. We just take a look at this concept and say, okay, well, the easy trend is at night. The easy trend is at night, and you can see that once again by looking at 61 total net profit over drawdown, 61,552 over $15,000 drawdown, whereas the other scenario is I'm going to, let's see, I'm going to comment this out. These slashes comment a line out, and so the only code that's active is this right here, scenario A. Now we're going to verify this, and you're going to see buying the day session open, selling the close. And note the difference between the total net profit divided by drawdown, roughly 401%. So I'm going to highlight this, or going to verify this, and we're going to take a look at the difference. So 133. So 42 over 31 is 133% versus 401%, and the equity curve isn't nearly as good. So we go with the smooth trend at night, taking the trends at night. Night trader does continue to hold trades through the next day, but this is a scenario that you want to take a look at. If you're struggling with your day trade trends, take a look at the nighttime patterns. This is beneficial. When I began trading, the markets were quiet at night, and when I began trading, I was still working, and the markets were quiet at night, and so I didn't have nearly the same opportunities. But if you are working a full-time job, you can have almost the best of both worlds, because there's a lot of opportunities at night now, and so day trading is not always as glamorous and exciting as it might be cracked up to be. And you also have the benefit of automating strategies while you're at work, and so you have the best of both worlds. When I first started trading, the automation software was not there, and so great opportunities. Wanted to share that with you. Opportunities at night and automation strategies during the day as well.